Hey traders, John Howell here. In this video I'm going to talk to you about a comment that I see a lot, which is the markets are rigged, John. How can you trade it consistently and do well out of the market? So let's actually get straight into it. Guys, do not place trade based on what you're seeing in this video because trading is risky and it can cause substantial financial loss. If you're not consistent, disciplined and patient at trading one simple trading plan, you are never going to get ahead in the markets, okay? So this is just education only. So I got let me just share this with you here, right? So on a video that I did, I got let me just do this here. All right, so I've got a comment here saying markets down, metals down, question mark. That's right, epic manipulation. So here is one thing that I do say about trading, okay? And about what you're seeing and what you're looking at in the markets. And how you're looking at the markets and how you're trading the markets, how you're thinking about the markets. The thing about the markets, guys, is that the market is always telling you what's going on and what's happening. Now, for example, is that if something's going to have a decent pullback, it will generally go for a big run first. So if you look at, say, it doesn't matter, like S&P 500, Dow Jones, but if you look at this, say I'm going to bring up this chart here, okay, on the weekly chart. All right, let me bring up, I'm going to bring up just a blank candlestick chart here for a minute. And I'm going to squeeze this up. Now, notice how, if you look at the market, right, notice how whenever the market goes pretty vertical straight up, we have a bit of a pullback, right? Get it straight up and a bit of a pullback. The thing is this, guys, is that the market's always telling us what's going on, whether stocks are way overvalued and we're likely to have a decent pullback, whether we have a vertical move, or whether the sellers are just lowering their prices. So for example, if we have a look at silver here, okay, and let me actually bring you back to silver. Like again, just looking back on the silver price here, whether it's the silver price or whether it's any market out there, the market is always telling us what's going on, and if we're always just focusing on the short-term picture, what's happening right now on today's candle, or looking at the overall picture on the market, we're never really fully understanding, and we're always using these things like the market's manipulated, and so on and so forth. And I guarantee you, at least 90%, probably almost everyone that says those terms, markets manipulated, markets down, metals are down, the market's manipulated, are the ones that are probably trying to buy this market in the face of the market telling them that this is likely, this has more of a probability of continuing down than staying up. So my point of view when looking at the market is that the market's not manipulated. Now, yes, there are some things that happen in the markets and all that sort of stuff, but you've got to throw that whole, epic manipulation out of the window. Because that is you giving the responsibility on your trading to someone else. Well, I lost money because of this thing over here. No, you lost money in the markets. Every time I lose money in the markets, it's because of me, no one else. So whenever you're trading, you've got to throw that out the window and say, okay, what did I miss here? So if you're looking at the metals right now, okay, if you're looking at, say, silver and gold, if you look at, say, the silver price, what was the actual chart telling us before silver actually broke and we had a decent drop down from, say, 17 down to 14? What was the actual chart telling us? Forget the manipulation, forget everything else. It was what? It was saying high, lower high, lower high, lower high, and then we had a little equal high, and then we started dropping down. So it doesn't matter whether you say the market's manipulated or the market's this, the market's that. What's so important to do is that forget all that other garbage. It's like, okay, what is this longer term picture doing? Because it's so important to see what the market is telling you and trade with that. Trade with what the big guys are doing. Whether the market is manipulated or not, the charts are always telling us what's going on with the markets. People say, oh, the market's so manipulated, John, you can't trade it, etc., etc., etc. Well, again, let's go back to say, let's bring up, say, the GLD price here for a minute. All right, and let's just say, okay, you said, okay, the market's manipulated, so you can't trade it, right? I can't believe it. They manipulated the price and so on and so forth. Well, you know, that's just the technical term for I have no idea what I'm doing in the markets, and I bought this because et cetera, et cetera, et cetera, right? So if you look at the markets here, look at this market here as a whole, right? And read along just with the peaks and troughs, because I guarantee you this is where it's going to help you a lot. Remember, looking at a weekly chart here, what's this doing? Low, high, higher low, higher high, higher low, higher high, higher low. So who's in control through here? Buyers, right? And then guess what happened? And this is where the better you can read the chart, the better trader you'll be. Because look at this here, right? The market ran up, went sideways, didn't really create a high low, did it? And then ran up. Now notice, I want you to notice one thing here. Notice from here to here how vertical that price move was. What is that creating? That's creating like a bit of a bubble in the market, right? Because if the market goes up too quickly, too fast, just like Facebook did before the crash, just like Bitcoin did before the crash, and so on and so forth. So we see that, oh, this market actually had a big blow off top, right? And then guess what happened? The market had a pullback, and guess what? It had a what? It had a higher low. And then guess what happened? It created a lower what? A lower high. Right, so this is the very first lower high ever since this bull run since 2009. Interesting, something may be changing. Then we come down and create a lower low. Then we come down and we create a what? We create a slight lower high, and then another slight lower high. Call it a double top, call it a double bottom. So as you can see here, right? Look at this here. Look at this here. So the market, as soon as this market created this lower high here and the lower low, remember this is on the weekly chart here. If you were long-term buy and hold through this level through here, well, then you would say, okay, let me remove everything off the screen here for a minute. You would say, okay, well, this lower high and lower low, what does that mean? That means that you should not be now in longs, right? If you're looking for investing purposes, that means this is possibly coming to an end of trend. So there's a few things that happen, right? The market stair steps up, and then it completely reverses, goes down. Or it stair steps up, and then it goes sideways for a bit, and then we start to stair step down. Or we stair step up, then we go sideways, and then we keep stair stepping up. So what you do is you wait for what? You wait for the market confirmation of what the market is telling you. Now, what is that? Just wait for things to tell you. Let's go back to here. We have a higher low, a lower high, a lower low. So lower high, lower low. Who's in control right now? Sellers. So if you're long-term investing in gold right now, if you're just buying the gold or even just in the GLD price, what is that telling you right now? Remember, this is the weekly chart. The weekly chart is, remember guys, the weekly chart is the tide. You know, if you're trying to swim against the tide, you're going to struggle. If you try to swim with the tide, you're likely to have a much better chance doing more. Right? So then we had a equal high and then a double top and a double. So what's happening through here? Who's in control through here? Slightly sellers, but really no one, right? Because what's happening? We're going sideways, aren't we? So we had a high, but then guess what happened? What ended up happening? This is the low through here. Right? This is the low through here. Then guess what happened? The market what? The market dropped down. So as soon as we broke through this low through here, guess what the market's telling us? Right, the sellers are in control now. And now the market ran down. And what did it do? Since the market broke down, since we created this top, the market is saying sellers are in control. Now, there's a lot of things I can teach you about this section through here. A lot of times, sideways movement, so on and so forth. But I'll get to that later on. And then the market ran down and created a lower low and a lower high. So at this point right now, or actually at the breaking of the point there, we could see, right, that we actually created a lower high, lower low. So it was actually sideways, but more slightly on the seller side. Then we broke down out of this here. So that's now creating a what? It's creating now a lower low. Definitely lower low. Who's in control? Sellers. So you shouldn't be buying it. Then the market runs down. Then the market comes up, creates a what? A lower high, double bottom, lower high. So in an upward trend, the most important part is a high low, higher low, higher low, higher low. In a downward trend, the most important part is a lower high, lower high. And notice that on this weekly chart, lower high, lower high. Notice throughout this entire time, throughout this many, many, many years, when if you were trying to fight the trend or fight the market, so to speak, you were going against the tide. That's like you getting caught in a rip and fighting against the rip. What do you do if you're in a rip, right? You actually go with the rip, get out of the rip, and then try to catch a wave in or something like that. So forget the market manipulation. Forget the market whole, all that sort of stuff, what's actually happening in the markets, and just follow along with the market. The market is always telling you. Remember, trading is all about probability. And you can have a choice of fighting the market, i.e. trying to buy the market when it's lowering the prices, when those overall charts are lowering the prices. Or you can just look for really good trading opportunities based on what you know that works. That's going to go with the tide. And look what happened here. So what ended up happening here? We had another what? We had another lower high through here. So lower high, and then guess what happened? We made our lower low, and now look at this here. So as this market, let me actually open this chart up now so you can see it. So as this market was doing well, as this market created a higher high, notice this is the very first higher high ever since this market came down, since say the middle of 2012. See that here? Lower high, higher high. What does that mean? That means, the trend may be changing, but what do we now need? We now need a higher low. And as you can see, the market created a high low, and then we actually then started to head back down again as well too. Right, so then as you can see, the market didn't do much, did it? It created a higher low, ran up, then came back down, created a lower high, and then created a higher low. So what's really going on through here? No one's in control, right? No one's in control. Now what's happening? Now we've got a what? We've got a decent lower low. Now the sellers are in control. Right, so as you can see here, look at this here. Actually, you know what? There was no significant high here. So the significant high was lower high, low, then it ran up, made this higher high, made this higher low through here. As you can see, that wasn't a significant higher low. And then guess what ended up happening? We created a higher low, and broke it. So right now what's happening? We created a lower high. This could be a lower low. This could be a lower high right now. So forget all this other manipulation crap out there. Just follow along with what that overall weekly chart. If you try to get a sense of where we are in the markets, flick back to that. Remember, the weekly chart is the footprint of what the big guys are doing. Don't fight the market. You're not smarter than the market, and go with the tide. Before you go, make sure you grab the free Grab the Markets by the Balls training course. In this training course, you're going to learn the top 13 deadly mistakes, the success formula, charting boundaries, the PT method, the ultimate trading system, the blast off trading system, #1 in trading indicator, the $1 million trade and money management, how successful traders approach the market, and so much more. Get this training course for free right now. Click on the very first link in the description to get this whole complete trading course to give you the edge on your side of trading this market. Do that right now, and I'll see you on the other side.